My dogs know tricks. Want to see something?
You hungry? You hungry? You hungry, Boots? Okay. Lola, speak. Speak. Ew, wait. Lucci, sit down. Bark. Bark. Good boy. Wait. Sit down. Give me a high five. Sit down. Give me a high five. Sit down. Okay. Back up, Lola. Back up. Back up, Lucci. Back up. Hey, we're working on it. Back up. There you go. Okay. Come get it.
Welcome. I am the FX Savant. Today I have an AUD NZD trade for a 2.6 risk to reward ratio or 57 pips take profit, risking 21.5 pips on this trade. In this video, I'll show you how I was able to find this trade setup and enter this trade setup using multi-time frame analysis and structure the right way. As well, for a little bonus in this video, we're going to go over the head and shoulders pattern and how I take advantage of it. If this sounds interesting to you, come on, man, do the thing. Let's do the thing. The thumbs up thing. Go ahead, subscribe, make sure you got the notifications on, and let's get right into it. Okay, so let's get into it. How are we able to find this position, get into it, take advantage of the M pattern, a really common pattern that happens in the market, and use that to our advantage? So what do? First, let me go out on the daily so I can set it up. But we'll go back to the daily and we'll go the day before. Okay, let's set it up. On the monthly, what do we have? On the monthly time frame of AUD NZD, what do we have? Well, if we look at most recent price action, we have an overextended W formation to the upside. And after an overextended W formation, what do we expect? We expect it to complete at the neckline. So we know overextended W formations complete at the neckline. We know overextended M formations complete at the neckline. That's what we're waiting for. That's what we're looking for. That's what we're going to take advantage of. So on the monthly, we have an overextended W formation and we want to see it complete at the neckline. Let's go down to the weekly. On the weekly, what do we have? On the weekly, we had also as well, bro, this one's to you, this is to you. Kind of wrote down some notes, that way I can kind of go through it a little faster, and the dead time for you, the dead periods for you are not as much. You don't have to, so hopefully I can do it all in one, but we'll go. On the weekly, what do we have? On the weekly, we had price that just broke below structure. So here's structure, supply, demand, support, resistance, whatever, it doesn't matter. It's all the same as long as you understand the concept that this is a significant area in the market. And once we get a break below the significant area in the market, we want to see price come back and retest that area. Just a simple break and retest to continue the momentum it has going down. So we have price that broke below this structure, used it, it was structure, broke above here, came back, retested it, broke up, impulse down. And once we have this impulse break below structure, it came back, retested structure. So we have price that has already retested recent support, now turned resistance. On the daily, we have a market that is creating lower lows and lower highs on its way down. So it is following market trend structure. So if we're trending to the downside, we want to see market creating lower lows and lower highs on its way down. That is what the market is doing. Also on the daily, what else can we see? Well, we just had an impulse and now we are correcting on the daily. So if we take our Fibonacci, we want to get information on the retracement, on the correction. We must take our Fibonacci on the impulse from the high to the low of the impulse. And what can we see? Right in here, we broke above the 50%, which isn't a Fibonacci ratio level. It is just 50% of the move, which in itself is important. And it's in between the 618 ratio, which is the golden Fibonacci ratio level. So this area in between, I like to say this is the magical area. We have price come and just retest this area and then come back down. This also is the candle we want to see the next one fill in the wick, head and shoulder patterns. So now that we have all this, we have price that we want to see complete the overextended W formation on the monthly. On the weekly, we have price that broke below structure and has just retested that structure. So it broke below support and is now retesting that area as resistance, and we want to see it act as resistance. On the daily, we have price making lower lows and lower highs, and it has just just impulse to the downside and retrace to the golden area in between the 50 and 618 zone. So with all that said, let's keep the charts clean. What can we do? Let's drop down to our entry time frames. Now we have our bias. We want to see the market move to the downside. We got that from our directional time frames, our monthly, weekly, and daily time frames. Now that we are in our entry time frames, anything lower than the daily, 4 hour, hour, 2 hour, 30 minute, 15 minute, 5 minute, 1 minute, 30 second, all those are your entry time frames. So on the entry time frame, what can we see? Well, if we keep this here, we know that this is our structure area. If we keep this here, we know that this is our structure area. It's our most recent resistance. Price just came into this area and we're now starting to make our way down. Head and shoulders. Now we're going to talk about the head and shoulders pattern. The head and shoulders pattern, how I define it, as a break above structure, price impulses to the upside, comes back for a correction, impulsing, breaking the structure it had just created. After that impulse, we see an opposite impulse. So we impulse up, impulse back down. So here's how we're going. We're impulsing, correcting, impulsing, impulsing. Impulse up, impulse down. And then on this correction, cannot break and close above this left shoulder. So our right shoulder cannot break and close above our left shoulder. And then after that, we want to see price come down, impulse correction, and impulse down to the other side, and then complete the pattern at the neckline. So that is our head and shoulders pattern. It is essentially just impulse correction, the most common pattern in the market. It's simply that on both sides. So we have an impulse correction, an impulse to the upside, and then we have an impulse correction and impulse to the downside on the opposite side of it, and vice versa for an inverted head and shoulders. So essentially it's a double top. It's just an impulse correction, because if we look at the right shoulder, so after we impulse correct, impulse to the upside, once we get this impulse down, there is no momentum to go to the upside. After we get a push up, if we get a push breaking structure to the upside, and then price comes back and breaks back down below some sort of structure underneath the left shoulder, the likelihood of price breaking structure again and creating a newer high is not very likely. So that's where your right shoulder comes in, and then we start to see the movement to the downside. So if we can take that information, what can we see starting to form? What can I see? Well, I see that price had broke structure up here, price had broke structure here, and we made it to the upside. And then once we broke structure to the upside, we then close back below that structure. So we have a left shoulder forming, and this is our head. So far, what do we expect? Not that we predict the market, but we expect that this level will hold, and I'm expecting price to come down and retest the neckline of our overall weekly area that we like to see, our weekly target. So on the 4 hour, price has started a formation of a head and shoulders. We had structure here, and price broke that structure, then closed back below the structure. This level right here, if we remember, this is on the weekly time frame. This is our resistance on the weekly time frame. As long as price is below this weekly resistance, I'm still bearish on my bias. As long as price is below this resistance level, we zoom back out on the weekly. This is the level we had identified this area here. As long as this is still holding, as long as price is below this area, I'm bearish on this. Now I just have to find an entry. So what did I see? On the 4 hour, we had price just come retest this area, and then we broke back down below structure. So if we drop down to the hour, what can we see? We can see that. Let's play it forward. One more candle. So far right here, a smaller head and shoulders, just to identify it. We can go through and identify it. Matter of fact, let me do that. Let me go back out to the 4 hour, and I'll just identify some head and shoulder patterns. For example, the left shoulder all the way to the wick, and I forgot to say that is break and close above the wicks. So break and close is above the wicks. We're clearing the area. We're breaking and closing above the area. So if we see price impulse corrected here, impulse to the upside, and then we impulse back into the area, came on down over here, but we came back, retested the left shoulder, and we did not break above it. And since then, price fell off. Let's go find another one. See if I can find another one. Here's one. Now they're not going to be perfect. Nothing in the market is perfect, but as you can see, price came in this area, came up, impulse, came back down, impulse broke above the area, then closed back down, impulse back into the area. So we impulse, came and retested the left shoulder, did not break and close above the area, and then we continued to fall off. Let me close my window. There's some kids outside playing. Let's see if I can find another one real quick. Just go back. And this happens through all time frames. So 15 minute, hour, 30 minute, 5 minute, 4 hour, 8 hour. You get these patterns over and over. All right, here's a good one. Left shoulder, impulse up, created the resistance. We broke above the resistance, impulse above it, impulse back into the area. And the same candle that we retested, we ended up going down as well. But once price came over and retested this area again, we then rolled over. It didn't get a large push to the downside because we were in an uptrending market, but we still had a push to the downside away from that right shoulder, away from this area. So I think you have a good idea of that. If not, you can find them a lot easier. Here's a picture perfect head and shoulders example. Okay, so price broke up, found resistance here. We then broke and impulsed above the area. We then impulsed back into the area. So we impulsed up, impulsed back down, corrected to the right shoulder, which is the left shoulder's resistance. We did not break and close above the left shoulder. That's really important. That's what's the signal that this market or this pattern is going to hold. So once we come back to this left shoulder, if we hold this resistance level, we do not break and close above it, then we start to see a sell-off. Then after the sell-off. So with the examples done, let's move forward. On the hour, as I was explaining, on the hour, you can kind of see that price broke up, touched our resistance area, then we broke back down into the area. So we impulse, corrected, impulsed up. Oh no, my computer died. We are back. Got the laptop back. Took about 3 minutes. Yeah. But all right, where do we leave off? 1 hour. On the 1 hour, what can we kind of see? So this is the left shoulder of the head and shoulders that we started to create on the 4 hour. This is the break above. This is the break back below. But on the hour, right in this area, we can see that this is the left shoulder and price did not break above or close above the left shoulder on the right shoulder on this side. If we play it forward, just point them out. Not that it works every single time. Of course, it needs to be in the right situation. But if we do play it forward, we can see that I said this point in time, I saw that this 1 hour bearish engulfing candle, not that candlesticks really matter, but I saw that this candle had just closed right underneath this structure here. We had just retested the area, came back and closed below this structure here. So we broke above this area, retested it, broke above, then we broke below with this black candle, closed below it. And I said, okay, at this point, drop on the 15 minute, what can I see? I see that this area is structure. We just had price break and close below structure. It did just retest it. One candle a little late, but you know what's coming. We got to show the proof. Here it is. It was sent to not only sell AUD NZD 1.0789. Can't see it backwards, can't read. But, and it was at 9:21 p.m. So if we see at 9:20, this is the 9:15 candle. So somewhere within this candle, as it was down here, I'm sure as it was all the way down here, I said 9:21 short. Where are we going to put our stops? Well, our stops are going to go above the high. And this is really important as well. The market has all this area to do whatever it wants before it confirms my bias, before it confirms my trade setup of what I want to see. I want to see market overall complete. The overextended W formation we identified down here at this area on the monthly. I'm just going to zoom out and mark it up just so we have it for reference. On the monthly, I had identified this area here. So something like this. We identified that this is the area we want to see price come and complete the overextended W formation. So jumping back on the 15, what are y'all doing? Jumping back on the 15 minute, we can see that we put our stops above the high, because if price breaks above the high and starts to create higher highs, we don't want to be in a sell position, and we give the market enough room to do what it wants. In this case, 21 and a half pips was enough to let the market do what it needs to do in order to confirm my trade idea. So we gave it this room. Really, ideally, we don't want to see price break above the left shoulder of the 4 hour head and shoulders that we had identified. So until price really breaks above this area, breaks and closes above this area, our bias should be intact. There's no fret. You shouldn't be worried about whatever happens. If you're in drawdown, it's okay. As long as price does not break and close above this area, which is acting as resistance, this is what we know, what we've identified in our head and shoulder patterns. That if we follow that, we know the outcome is a push to the downside. So let's get out on the 1 hour. Now that we see that we are triggered, let's monitor on the 1 hour. And as you can see, targets are down here. And as well on the daily, what did we have? Well, we took our Fibonacci on the 618, or we took our Fibonacci on the impulse down. down to get information on the retracement. Saw that we had a stop right in between the 618 and 50%. So if we want information on where the next retracement, we want information on where the next impulse will most likely stop, where the price will attract to. After an impulse and correction, we want to see where the next impulse will go. What do? We take our Fibonacci on the retracement. So from the high to the low of the retracement, we get the minus 272, minus 27 of the Fibonacci. And where did we put our targets? If we zoom out to the hour, which also lines up with our monthly bias, our overall directional bias, where we want to see price come and retest. We want to see price complete the pattern at the neckline, which is right here, which also lines up with the negative 272 of the impulse of the Fibonacci taken on the retracement, which also lines up with the 272 of the Fibonacci taken on the retracement. So there's more confluence, which I spoke about in the last video, more confluence as to our trade, as to why we should take this trade. So if we monitor, what can we see? Price moving in our favor. This right shoulder is holding and acting as resistance. So until we see price break above and close above this area, we shouldn't be worried. If market wants to do what it wants to do, honestly, I'm not even gonna lie, after I took this trade at 9, I went to sleep. I was asleep. So through all this, I wasn't even there to get emotionally attached to the trade. When I woke up, price had just made this move to the downside anyway, so we were in profit. Now I didn't go risk-free. I didn't say go risk-free yet, just because we got into profit. Just because market came down in here, I was still thinking that price wanted to come retest our entry, because what's happening? You can see not just an M formation to enter on the market, not just a break of structure. There's multiple ways to enter into the market. This is what I see works for me, what I see works best for me, and I know how to trade this for it's profitable for me. So you could have taken a simple trend line break and said I want to enter on the retest of the trend line. I don't know, whatever else y'all use. You could use something else. I'm sure it would identify that this trade. This is a typical trade after you see it play out. When you go back and look in the market and you're like, how? This is the trade setups that I see everyone talk about, but I don't know how to take advantage of them. There's multiple ways to get into this easy trade. It's just having the confidence to take the trade, the patience to stay in the trade, and the knowledge to know that if it doesn't go in your favor, you'll be okay. So as we see, we play it forward on the hour. What happened? I totally forgot. I also want to mention this. I'll probably make a video on this. News completes the move. I heard this early on in my trading journey, trading career, and I didn't really grasp it. But once I actually learned how to analyze the chart in a good technical, simple way, I understood what that phrase meant. News completes the move. So the Australian dollar's decision rate was coming out the next day. So we got into this trade on the 26th, the 27th Fed rate for the Australian dollar was coming out. I don't really pay attention to news, because I understand that news completes the moves. If I'm in the right trade and I have the right direction, right bias, and I have my stop in a correct place, that the news is only going to help my trade. And matter of fact, it's going to propel my trade to TP faster. That's how I take that as. So I'm not a big news guy. I don't like to enter in trades right before news, but we were into this setup. Saw this setup identified a day before it was supposed to happen. So it's okay. Let me go back one more, because this is the candle. This next candle is the candle that a lot of people would exit the market on. So they would see that they got into this trade, price went against them a little bit. Oh, it went into profit. Oh man, I almost lost that trade. I'm glad I'm in profit. It came back to break even. They either took a little bit of profit here, close out, move their stops to break. They didn't believe in themselves. They didn't believe in they didn't have the patience, let me say. They didn't have the patience to sit through this trade. For whatever it is, FOMO, whatever, they thought that they would think, I've seen this a lot, that price is coming back, or even they would exit the market on this. They would say price is closing above my entry. I was in profit. I don't want to lose whatever I'm risking on this trade. They would exit the market and say, all right, well, that was a bad trade. At least I got out before it hit my stop loss, only to see this next candle happen. This was the news that we were talking about. The decision rate, whatever it was in the market, propelled our trade in our favor. We had the right direction from our higher time frames. We had a good entry on a break of structure. So we entered on the break of structure, price closed below structure, and we entered on the retest. And then we sat through. We had our stops to have hit our stop loss. I wouldn't want to be in this trade anyways, because we're probably going to continue to make higher highs and higher lows. So I put our stop in a great place, and our target, play it forward. We can see that price after that. Oh, I do need to say, we did go risk free after the market had made that move to the downside. So not too long after. So move stops to break even at what? At 9:40, we said move stops to break even. If we look on the chart, what time is it? It is about 9 o'clock. So right after this candle closed, while this candle is forming, we moved our stops to break even. And then not too long after that, at about 1:40 in the afternoon, you could see that the TP was reached. So let me go ahead and play it forward. And as you can see, our TP was tapped perfectly. And since then, what has the market done? After hitting our take profit, you can see the prices came back to where we almost entered into the market. So as you can see, price tends to attract to the negative 272 of the Fibonacci, taken on the retracement a lot. You see the take profits. As you see, the take profits are hit to the pip. Stop losses are really not in danger. We have structure protecting the stop losses as well, entering in on structure. Took advantage of our head and shoulders. As you can see, if we move out to the 4 hour, what can you see? Zoom in on this area. We have a nice head and shoulders pattern that is formed. Left shoulder, head, and this area here, the right shoulder. We took advantage of that and our knowledge to find this 2.6 risk to reward trade, or about 57 pips, risking 21.5 pips. If you did like this video or you did learn something, do me a favor and drop me a thumbs up. Make sure you are subscribed with notifications on so you do get notified when I upload educational content like this, because I feel like this is something that not a lot of people know, but it is free education out there. It's just hard to find. So I want to go find the free education that can help traders in the market and bring it to you. It's free. It's over here for free. A lot of people won't tell you these. These are their secrets. This is a lot of things that they will sell you. People will sell you, try to sell you this information, but I'm gonna give it to you for free. Other than that, go in the description, check out my website. That's highly appreciated. I offer signals like this. This was sent to the pro signals chat as well as the free signals chat. I do offer one-on-one mentoring as well, where I just teach you the things that I know. Things like this, how to take advantage of the market. I also help people create their own strategies using some of the things that I know, that I teach them, and some of the things that they know. So come to me if you already know some things. You don't have to start from scratch. We can take what you know and we can build from there. So yeah, just check out my website and that's it. Overall trade, you see that we took advantage of the most common pattern in the market, the impulse and correction, impulse, correction, impulse, and as well as a head and shoulders formation. I appreciate you viewing. Hope you're having a green week as well as a green day. And until next time, I'll holla at y'all.